Good evening, all. Welcome to Bro Billionaire. This is Raghu bringing you the new learning series on CPR trading. What you're currently seeing is Bank Nifty, and this is applicable to all the instruments. I'm just picking Bank Nifty as an example because this is high liquidity, highly volatile index in India. So what I'll be covering here is the trading around CPR, R1, S1, previous day high, previous day low. Yesterday, I gave you a brief introduction about the CPR R1, S1. Now, this video covers a particular trading methodology which you can implement, right? And I have added 20-day moving average. What does this 20-day moving average tells? This is 5 minutes time frame. Whenever price is below 20-day SMA, price is down. About 20 SMA, price is up. I need not tell when 20 SMA is flat, it indicates sideways moves. So hope you understand everything. Now, why previous day high and previous day low is very important is they form very important pivots and price action points. So whenever price is outside the previous day value, range and value, you need to consider that the smart money will enter and take the price to new level. That is the assumption. Now, what are the trading methodology? I will just show you. So today, okay, we don't have anything between the price opens below S1, it's hovering there itself. So suppose if price went past and crossed previous day low, see here, this is an important resistance point. If it had crossed, the next target should be central CPR. Is it bottom circuit, central pivot, top circuit? We don't know. The next target is CPR. Now here, yesterday I did not cover some concepts like virgin CPR, inside CPR, outside CPR. They form a trading strategies. So I will be covering them in the future videos. Today we are not going to touch them. We will focus only on the trading methods. Now see here, I have marked this one. Now the price opens below previous day low, strongly cuts 20-day moving average, takes support at central pivot. Do you remember my first 5 minutes and 15 minutes magic? Even if you cover all these three candle, so you can think on this day, the uptrend is only after the break of top of the first 5 minutes candle where it can go to R1, and if R1 breaks to next level. Now, when this has happened, so you need to think that market is going to go down until it breaks the top circuit. Whom does the top circuit belongs to? Buyers. Absolutely. Now see here, in between CPR, it's a no trading zone. And see here, market tries to break the top circuit of the central pivot range, comes, breaks the 20-day moving average, and then this is your confirmation because you have the least stop loss to the top circuit here. If you had taken and hold it with around 25 point stop loss, which I keep advising for Nifty, and 50 points for Bank Nifty, not more than that, you would have got your target even in the last 1 hour of the trading day. We'll move on. So here what you need to observe is previous day high acting as strong resistance, and even after market spending sideways, eventually it went down. It did not cross the first 5 minutes candle. Suppose it was a small candle, you could have taken the trade at the low of the small candle, keeping the previous day higher stop loss, targeting central CPR. We don't have any trade here. Now watch this one. This is one of the most beautiful trade for me. Now we have previous day closing around CPR and 20-day moving averages here. Price somewhere opens above previous day low, quickly comes, tests S1 and breaks the central CPR as well. This is kind of narrow CPR. The moment it breaks the central CPR zone in one zoom and the 20-day moving average, guys, this is a very high probability trade. Whenever this happens, it's a blind trade for me because my stop loss will be below CPR, below 20-day moving average. Suppose if it hits stop loss, again goes up, I'll again enter. Because this is a narrow pivot. Narrow pivot, I have explained the width of the top circuit, central pivot, and bottom circuit whenever in comparison to previous CPRs. Watch here. This is smaller, right? Narrow. On this narrow pivot, the price tends to break out of the range. What are the conditions? The prerequisite conditions on this particular day is market has gone into a kind of range bound in last 2-3 days. So it is like you pressing a spring, and on this particular day allowing the spring to run up. So because market was in sideways for most part of the 2 days, on this particular day it decided to go up. If it had gone down, yes, you should take the trade down because it's a high probability. Understood? Second one, combination of narrow pivots or any CPR, any CPR with 20-day moving average, you have a trade. And very important, what you need to understand here is whenever a big candle takes out previous 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. See, it has taken out almost more than 10, 12 of candles here in one shot. Usually, most of the professional traders tells if it takes out 4, 5 candles on the side, it's a breakout. Now, this is a breakout. So you need to remember this. I'm not going to mark it for you. You need to remember this. So this candle has taken out several previous candles, narrow CPR, broken out of 20-day moving average. And here you need to just follow 20-day moving average and ride the wave. This is a failed breakout below 20-day moving average. So it did not sustain, went down. Okay, here near R1. So price opens, forms a red candle. When it's a red candle, I have made a dedicated video on how to decode price action methods using Frank Ochoa's 4 types of candles and couple of them which we see more frequently. Using only that you can trade in the market, right? So when you see this kind of pattern, okay, forget it, this is a gap up. What do you mean by gap up? So this is a gap up. Pre-market is a gap from here, right? You need to consider this as what? This is a green candle, right? The gap up is always a green candle. So this is on top. Market has gone from here. You have a green candle, you have a doji. This comes. Is it a hanging man? Is it a evening star? You decide. So these things you should remember quickly. Once you have this first 5 minutes and it is forming near R1, so this will be your stop loss. Yes, market went sideways, but if you had just gone, you have taken a trade keeping R1 as stop loss, your trade would never hit. That is the point. Now R1 is acting as a stiff resistance, and once the previous day high, which is another resistance, is broken, you need to think that market is going to go and test the CPR. Now between R1 and CPR, most of the folks tells that the moment it faces resistance near R1, the next stop is CPR. No, that's not the way. It is the previous day high. If you see previous day high, see here market spent considerable amount of time here. This will act as a support. Once the previous day high is broken, then it will come to CPR. You need to think this. See, this is a classical outside CPR, which I'll be covering. Outside CPR means most of the time market goes in sideways range. That's the reason why it went sideways. Now here, big candle breaks straight away to the previous day low, then S1 will be tested, market goes up, comes down, and near S1 spends considerable amount of time. Now I have told you that below S1 is smart money, above R1 is smart money. Now here, why market did not go down? It's not our concern. We don't know how market will work. We only take high probability trades, but that's the reason why this 20-day moving average comes into picture. See, this is double top and resistance. But here, once you see 20-day moving average is becoming flat, You just need to wait. And what is this candle? How many candles it took off? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. When you see this kind of jumbo candles in Bank Nifty, which is a frequent seen near the bottom and above the 20-day moving average, is breaking the 20-day and previous day low with volume. So 20-day and previous day low, which acted as a resistance earlier, is broken in one move. You can target CPR. Near CPR, watch the price action, target next one. Or you can ride the wave with 20-day moving average. Understood? Here, central pivot. Most of the times when this happens, trust me, keep this in mind. When the price previously also, when the price breaks central CPR and 20-day moving average, it will go even vertically low. It went down here. From here, how many points? 35,500. It came low to 35,200, around 300 points. You can anticipate more than 500 points when you see this phenomena. Again, I'm showing you central CPR and 20-day moving average, first 5 minutes. If you take a trade here, keeping stop loss of first 5 minutes or even 50-point stop loss, your stop is not hit. You can continue and book 1:2. Watch here. The previously I showed, right? Gap up, you have a green candle and then an inverted reversal pin bar, and then this red candle, evening star. Now, once this green candle low is broken, if you take a trade here, keeping stop loss above R1, you have target CPR. After break of previous day high, CPR has hit. Now here previous day low is broken. After previous day low is broken, the next target is S1. So once S1 is broken, you have a 20. Watch this 20-day moving average. How close you are so frequently seeing this. This is one of the most simplest trading which you can do in Bank Nifty. And it does not happen every day, but it happens frequently as you're seeing it. And if you take a trade, you have both down and upwards as well. See again this jumbo candle. I just want to see when you see this jumbo candle, how many candles it is taking off. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It is breaking S1, above S1. Bias will enter, market goes to CPR or follow 5 EMA, 8 EMA with 20-day moving average. I don't like to use too many EMAs. I use 5 EMAs, but this is for demonstration purpose. I'm showing you so that you can focus on the price action. If you add too many things, you won't be able to filter out. See this one, central CPR broken. It opens near R1 and previous day high, one ZIF. Big candles. See, such big candles are very hard to be taken out. The market is screaming that it's going to go down. Yes, it went sideways below 20-day moving average, but below S1, down. Here, it continued. The trend continued here. 20-day moving average, boom. You can take some of the time today. I took within first 2 minutes, right? At the opening, I use these techniques because I want very small stop loss. Even if I'm a scalper, so suppose if market has closed above this, I would have exited. This was my stop loss, the small peak. If market has to go down, it will go down because previously it has shown the strength and is going on the downside. It has to go down. This is how you need to read the price action. Not this one, not this one. Watch here. Previous day low, it breaks, come closest to CPR because we have some buying zones here. So, and then market goes up, faces resistance, comes down. Now here, once you see this kind of candle, this green candle is taken out, my stop loss will be up and I will go down. This green candle I'm talking, I'll show you. This one. There is a dedicated price action. Sorry, it is not a dedicated. I'm going to make one dedicated price action here. This is not the ideal one, but what happens here is when market, whether it's a green candle, tries to break the R1 and fails, the high is above R1, but the close is below R1. Understand? The high is here. This is the wick, right? You can watch. This is the wick. but close is below R1. All I wait is I wait for market to break this green candle low. It may happen immediately. It may happen in the second candle. So here it happened in the second candle. See here. If I enter here, I will scalp the point. This is scalping. All right. I'm not going to go till CPR. This is scalping for me. Another strategy, guys, I'm not going to make notes. You have to make notes. It's a lengthy video. You may feel it's bored, but this is what I'm showing you. Here it tries to break, but you have an equally strong red candle. For me, when I see this, I will blindly take this one. Here itself I will take because this is a stop loss. This is double top and this is a sell-off area and we're having a negative candle here itself. So it will give me good risk to reward. In the second double top, when I see this, I will go for 1:2. I'll keep 25 points stop loss and I'll see till where market can go. I'm ready to take the stop loss here. First time scalping, second time, I'll go for 1:2. It gave big money here. Once 20-day moving average was broken, it went boom. See here, even if it comes here, it just took support on 20-day and previous day low and went up. Wow, this is another one. Okay, near CPR, you have 20-day moving average, market gaps up, facing resistance near R1. All I wanted was this kind of pattern closer to the 20-day moving average. This is morning star, right? Or is it a gravestone doji? Whatever you call, I'm poor at the names, but all I watch is this price action. Price tries to push down. Here, this reversal pin bar shows the weakening strength, and then this is demonstrated strength. I'll immediately take my stop loss will be here. No matter if it is 50 points or 60 points, it is below 20-day. And after that, I'm going to ride the wave. I'm not going to exit here as well. My stop loss will be here. If this candle would have closed below 20-day moving average, I would have exited because this was the range low. It just came down and pushed up, demonstrating that price is going up. So until here, we have a lot of overlapping candles where it's not easy. After now, when I'm telling it looks easy, but in real-time market, I do understand that these are all several overlapping candles. Price is not going anywhere here. It's moving very slowly. It started moving here, it moved, then again see sideways. Then it moved little bit, again sideways. So it kept taking support near 20-day moving average. But if you keep 50 point stop loss here and just hold it with courage, by the end of the day, you would have covered around 300 or 400 points. That's what exactly I'm telling you. Not sure how many strategies we covered here. Market below previous day high, take support at the upper CPR. It's not able to break it. Whom does the upper CPR belongs to? You have one candle. This is double bottom and about 20-day moving average. It goes, comes down somewhere here. It breaks. The top is broken. You can ride the wave with the 20-day moving average. So identifying that this belongs to buyers, this belongs to sellers, this is a no trading zone and I have a 20-day moving average. I have a range bound. The first big candle, which took several candles, did not have strength for price to take down, but eventually around midday, this jumbo candle was taken out by buyers, should give you confidence that market is going up. But if you trade around 20 trades in here, losing money, then obviously we'll have not have confidence that market is going to go up here. See how beautifully it went. It went almost on 300, 400 points. Hope this helps, guys. I'm going to bring more dedicated strategies around CPR and around Bank Nifty where you can easily identify and make money. So this video is dedicated for all the new traders because you can easily identify this price action with pivots and why I covered only R1, S1 and central CPR, previous day high, previous day low is most of the times market will be sideways. 60% of the time market will be sideways. So assume that if I am going to add these things, all the inputs, then you will be lost. Even I was lost when I started trading It's an emotion that we keep so much of real estate on the chart. When I add so many lines, the focus on R1, S1 will be lost. What is happening here will be lost. So this is a very important trading technique I'm telling you. When you remove this, right? When you remove R2, S2, you can add them later. But when the market opens near the central CPR or below R1, you just remove everything else and focus there so that you don't overtrade. You just focus on what's happening there and try to capture the scalping points here, 50 to 100 points on day-to-day basis. Hope this tip helps you. Please do like, share, subscribe. I'll bring you more and more strategies around CPR. These are magical pivots. Cambrilla I have covered. If you want, you can watch them. There are other amazing pivots. Once you gain the complete knowledge at the opening, if you see Cambrilla or floor pivots where the price is opening, you will know which one to pick. You want to pick Cambrilla, you can pick and go with it. Just stick to it. Don't add both Cambrilla and R1 to one chart because that will lose the plot, right? Thanks a lot. Have a good day. God bless you all.